All right, welcome back to Talk Tickers. We're strapping on our helmets and diving deep into 3D Systems Q3 2024 earnings call.
Beyond the numbers today, really getting a sense of how this company, a real pioneer in 3D printing, is handling a pretty tough economic climate.
I'm really interested to talk about a healthcare side of their business.
Yeah, for sure. Stuff that sounds like straight up science fiction.
Like 3D printed organs?
Exactly. But first, a little context.
Okay, set the stage for us.
3D Systems, DDD on the stock market, facing headwinds, just like the whole industry.
What kind of headwinds?
Slowdown in hardware sales mostly, global uncertainty, making businesses hesitant to invest.
Makes sense. A lot of hesitation to buy new equipment when the economy feels shaky.
Absolutely, that hesitation showing up in their Q3 results.
How so?
Well, revenue was flat compared to last quarter.
Flat.
Yep, and a bit weaker than analysts were expecting.
Weaker, huh? So, is it all bad news for DDD?
Not exactly. Year over year, their revenue is down 9%.
Oof, that's a pretty noticeable drop, isn't it?
It is, yeah. Mostly those big 3D printer sales lagging.
I see. But you said not all bad news.
Right. There is a bright spot. See, the materials side of their business is doing well.
Materials? Like what?
The stuff those printers actually use. Think of it this way. You might not buy a new printer every month, but you do need to buy ink.
Oh, right.
So even though new printer sales are down, businesses are using their existing 3D printers more.
And needing to stock up on materials.
Precisely. And it's been a consistent trend all year.
What, the material side?
Yeah, with a 9% jump just this past quarter.
So maybe the slowdown is temporary and businesses will need to buy new printers soon.
Could be, yeah. Or it means companies are integrating 3D printing more deeply into their operations.
Interesting. The transcript also breaks down revenue by segment. Can we take a look at that?
Yeah, let's do that. As you might expect, their industrial segment is hurting.
Hurting, huh?
Down 19% year over year, lagging hardware sales are the main reason.
So not great news on the industrial side of things.
Right.
But what about healthcare?
Good point. That was highlighted as a potential growth area, remember?
Yeah, definitely.
And it delivered. Up 5% year over year, driven by dental and what they're calling personalized healthcare.
Personalized healthcare, so like custom medical devices and stuff.
Exactly. Custom surgical guides, implants, things like that.
Wow. Maybe even like 3D printed organs someday.
Hey, it could happen.
Yeah.
But for now, it's clear they're making real progress in healthcare.
Okay, that's exciting. But let's back up for a minute and look at profitability.
Sure. Their gross margin, essentially the profit they make on each dollar of revenue, well, it took a bit of a hit.
A hit from what?
Inventory adjustments happen sometimes. Companies have to write down the value of their inventory.
So just some accounting stuff affecting the numbers?
Right. But if you adjust for those write-downs, their gross margin looks pretty good.
How good?
Around 40%. So they're managing their production costs effectively.
That's good.
And they're also cutting operating expenses, marketing, administrative costs, R&D even. They're projecting those expenses to fall below $60 million next quarter.
So despite the tough sales environment, they're still being smart with their money.
Exactly. But here's the thing. They're also staying committed to research and development. Not a lot of companies can do that when things get rough.
That is impressive. Investing in innovation during a slowdown.
Yeah, I think it shows they have a long-term vision. They're not just trying to survive. They're betting on innovation.
To differentiate themselves.
Yeah, and to be in a good position when demand comes back.
It shows they really believe in the future of 3D printing.
Absolutely. And speaking of innovation, remember that deal with Sauber Motorsports?
Oh, yeah. The Formula One team.
Yep. They recently bought 10, count them, 10 new 3D printers from DDD.
10. That's a big commitment, especially from a team known for pushing technology to the limits.
For sure. Formula One is all about speed and efficiency, using the latest tech.
So it says a lot about the quality of DDD's printers.
It does. And it highlights a crucial point. DDD's technology isn't just for, prototyping or niche applications.
Right.
It's being used by industry leaders in some of the most demanding fields out there.
Okay, I'm officially interested. Let's dive into some of these cutting-edge applications.
All right. Let's start with Quick Cast Air. It's a new solution aimed at the investment casting market.
Investment casting. Not sure I'm familiar with that term.
It's a process used to create super complex metal parts. Think jet engine blades, rocket components, stuff like that.
Oh, wow. That's some seriously high-tech stuff.
Yeah.
How does 3D printing fit in?
Well, Quick Cast Air uses 3D printing to create the initial molds for those parts.
So instead of using wax, they're 3D printing the molds directly.
Exactly. And it brings huge benefits, like incredibly complex designs that would be impossible with traditional methods.
So more complex designs, faster production.
Yes. And it's more environmentally friendly, too. They can reduce resin use by up to 50% in some cases.
Wow, that's pretty incredible. Sounds like 3D printing is really revolutionizing how things are made.
Yeah. It is. And DDD is right at the forefront. They're not just iterating, they're fundamentally changing things.
Okay, so they're helping build some of the most advanced machines in the world. But what about healthcare? What are they doing in that space?
They're partnering with Baker Hughes, collaborating on the Octon Industrial MOS platform.
Remind me what that is again?
Think of it like a brain for the entire 3D printing process.
A brain?
Yeah, it's software that manages everything, enabling on-demand manufacturing and optimizing workflows.
Wow, that's amazing.
And it leads to benefits like reduced engineering time, less waste, and faster turnaround.
So even more efficient.
Exactly. Now, to get back to healthcare.
Yes, please.
Their personalized healthcare segment is doing really well, driven by new FDA clearances.
Clearances for what?
Orthopedic surgical planning tools. It's a big step beyond their existing work in dental and spinal applications.
So they're expanding into other areas of the body.
Exactly. And the FDA clearances show that they're serious about becoming a leader in healthcare.
It's amazing how 3D printing can be used to solve real-world problems in so many different industries.
It truly is.
Okay, so we've got a company that's innovating, committed to R&D, and growing in exciting markets like healthcare. What's next for 3D Systems?
Well, they're seeing some positive signs in their core markets, but they're being cautious about the fourth quarter.
Given everything we've discussed, that seems like a smart move.
It is. And it's important for investors to understand that the bigger economic picture is still a big factor.
So there's still some risk involved.
Definitely. But DDD is doing what they can to manage those risks. They're focused on efficiency and cost management.
To make sure they're profitable.
Right. And their cash position is strong, so they can keep investing in R&D and be ready for when the market improves.
Sounds like they're playing the long game.
Exactly.
All right, time for my favorite part, the This Is Not Financial Advice segment. We've talked about the good and the bad. Now let's have some fun.
Oh, let's do it.
What's an outrageous yet plausible trade idea given everything we've learned about DDD?
Here's a thought. What if the economy starts to recover and at the same time, DDD's new products really take off?
Like quick cast air taking the aerospace industry by storm.
Exactly. Imagine companies rushing to adopt it because it lets them build lighter, more efficient aircraft parts.
Okay, so increased demand for quick cast air leads to
Huge revenue growth for DDD. Add in their cost-cutting measures, and their profitability could skyrocket.
and their stock price.
If everything goes perfectly, we could see it double or even triple in the next couple of years.
Wow. Now, that's something to think about, though. Of course, this is all hypothetical.
Absolutely. Purely speculative. Definitely, this is not financial advice.
Right. But it's fun to imagine the possibilities, right?
Sure. It shows the potential upside if DDD executes their plan.
Definitely something to keep an eye on.
Welcome back to Talk Tickers.
Let's pick up where we left off. You mentioned FDA clearance for DDD's orthopedic surgical tools.
Right, and it's worth noting, this clearance is specifically for ankle surgery guides.
Ankle surgery.
Yeah.
So they're expanding beyond dental and spinal work.
Yeah, exactly, moving into new areas.
Is that a big opportunity for them?
Definitely. The ankle surgery market is expected to be worth billions in a few years.
So that FDA clearance positions them well for growth.
It does.
It's amazing how 3D printing is changing healthcare. You know, we talked about those surgical guides, but what about bioprinting?
Printing, yeah.
Like printing actual organs.
That's the holy grail, right?
It is.
DDD isn't printing fully functional organs just yet,
Right.
but they're making progress in bioprinting and regenerative medicine.
Imagine. No more waiting for donor organs.
You could have organs custom printed using your own cells.
Sounds crazy.
It does. But given DDD's track record, I wouldn't be surprised if they were leading the way there, too.
Yeah, they're not just a 3D printing company. They're really pushing the boundaries of healthcare.
They are, for sure.
Okay, let's shift gears back to financials for a second.
Okay.
You talked about their strong cash position earlier. What did you mean by that?
Well, they ended the quarter with $190 million in cash.
190 million.
Yeah, a nice cushion, especially in these uncertain times.
So it's sitting pretty.
And they've been using that cash strategically,
Oh, yeah. How so?
buying back their own debt.
Buying back their debt. Interesting.
Yeah, reduced their convertible notes by over half since last year.
That's a smart move.
It is. Strengthens their financial position and reduces risk.
So they can keep investing in R&D.
Exactly. Got to keep innovating to stay competitive.
Right.
Speaking of which, what did the CEO say about their overall strategy?
Fill us in.
He really emphasized operational efficiency, doing more with less.
So being careful with their spending.
Right, but also being strategic about it. They're always evaluating their
To
operations.
see where they can cut costs.
Exactly, without sacrificing quality or innovation.
So it's not just about slashing budgets across the board.
No, it's about being smart and targeted.
Makes sense.
And they've already made some moves, streamlined their operations, reduced their workforce.
And that's showing up in the financials.
It is. These actions are starting to pay off.
Good news for investors.
Absolutely. They're in it for the long haul.
Okay, before we get back to those trade ideas, let's zoom out a bit.
Zoom out.
Yeah, look at the bigger picture. How does DDD fit into the overall 3D printing market?
That's a good question. They're definitely considered a leader.
A leader? How so?
Long history of innovation, a diverse portfolio, serving both industrial and healthcare.
So they're not just focused on one specific area.
Right, that helps them when different parts of the market are up or down.
But 3D printing is still a relatively new industry, right?
It is. Lots of potential, but also lots of competition.
So they have to keep innovating to stay ahead.
Absolutely.
What are some of the trends shaping the future of 3D printing? What should we be paying attention to?
Well, new materials are a big one.
New materials.
Yeah, even stronger, more durable, more flexible. That opens up new possibilities.
For sure. So what else?
Software and automation are becoming more sophisticated.
So smarter 3D printers.
Exactly. Imagine factories full of 3D printers all talking to each other, automatically adjusting production, even fixing themselves.
Wow, that sounds like something out of a sci-fi movie.
It does. We're moving toward a world of automated and customized manufacturing.
And 3D printing is going to play a huge role in that.
A huge role.
Okay, time to put our speculative hats back on.
All right, let's do it.
Another outrageous but plausible trade idea, this time focused on the 3D printing market as a whole.
Okay, let me think.
What if a major aerospace company decides to go all in on 3D printing?
Like for a key part of their next big plane?
Exactly. They realize 3D printing lets them build components that are lighter, stronger, more fuel efficient.
Okay, I see where you're going with this.
And of course, they pick DDD as their supplier.
Of course.
News breaks. Everyone realizes 3D printing is the future of aerospace.
DDD stock goes through the roof.
They become the go-to 3D printing company for the entire aerospace industry.
Nice.
But let's add another layer to this.
Another layer.
What if, at the same time, there's a breakthrough in bioprinting?
Whoa, hold on. You're saying DDD figures out how to print organs?
Yes. What if they print a heart, a kidney, a liver that can be transplanted into a human patient?
We're talking Nobel Prize stuff here.
DDD becomes a global healthcare giant, their technology saving lives all over the world.
This is getting pretty wild.
Okay, I know. This is all hypothetical, purely for fun.
Right, definitely. This is not financial advice.
But it's fun to think about the possibilities, right?
It is, and it shows how much potential 3D printing really has.
Okay, let's bring it back down to earth for a minute, back to DDD's reality.
Sounds good.
Still lots to talk about, their current business, the challenges they're facing. Welcome back to Talk Tickers. Time to wrap up our deep dive into 3D systems.
It's been a journey, that's for sure.
We've talked a lot about their growth potential, the innovation, their position in these exciting new markets.
Right, lots of positives to be excited about.
But we also need to acknowledge the risks, right? Every investment has them.
Absolutely. Nothing is guaranteed, especially in an industry as fast-moving as 3D printing.
So what are some of the risks with DDD? What should investors be thinking about?
Well, the macro environment is still a big one.
Right, all that global uncertainty we talked about.
Exactly. If the economy takes a downturn, it could really hurt demand.
Even for DDD's cutting-edge products.
Yeah, even for those
You know,
competition, it's heating up.
lots of new players entering the 3D printing space.
Yep. And existing companies are pushing hard too, constantly innovating.
So DDD needs to stay ahead of the game.
They do. And there's always the risk that their new products won't be as successful as they hope.
Right, quick cast air and those other innovations, they might not take off.
Exactly. Adoption could be slow. Competitors might come out with something better.
And what about regulations, especially in healthcare?
Good point. New technologies always face hurdles. Getting approvals can be tough.
So DDD's success in healthcare really depends on navigating those regulations.
It does.
So definitely some challenges ahead for DDD. But that's why we always say this is not financial advice.
Right. It's all about doing your own research.
Don't just take our word for it. Look at the financials, read industry reports, talk to experts.
Exactly. Make informed decisions.
So for anyone listening who's interested in DDD or 3D printing in general, our advice is simple. Stay curious, do your homework, and invest responsibly.
Couldn't have said it better myself.
All right, that wraps up our deep dive into 3D systems.
We've covered it all, the good, the bad, and everything in between.
Hopefully you found it informative and interesting.
And maybe it sparked your interest in the future of 3D printing.
Thanks for joining us on Talk Tickers.
And until next time, happy investing, everyone.